Good morning and welcome to this brand new edition of Opening Bell on Money Control. I am Nandita Khemka. Well, blue is the color that is dominating, this morning, of course, dominating the screens as well, given the fact that I am wearing blue. And as all my colleagues, as are all my colleagues across the network as well. Proud moment, what a night for Indian cricket. And, in a final for the ages. The Indian women's cricket team scripted history yesterday, defeating South Africa by 52 runs to lift their first ever women's world title in over 4 decades of the tournament's history. Now, at the D.Y. Patil Stadium on Sunday night, it was a complete team effort. Shefali Verma's golden, Nifty Sharma's brilliant all-round show and Richa Ghosh's powerful strokes. Everyone played their part to perfection. And let's not forget the electric crowd as well. They were cheering every run and every wicket with unmatched passion. Now, these images on your screen aren't just moments of victory. They're a reminder that perhaps the ghosts and scars of November 19th, 2023 are finally being laid to rest. Ironic, really, right? Given the fact that cricket is a sport that is dominated by males. This is something which has come as a huge thing. Of course, making every woman proud in the country. Heartiest congratulations to Team India, our women in blue, for making the entire nation proud. Wonder women, so to say, out there. Heartiest congratulations to them. And of course, all credit goes to them for putting to rest the ghosts of the past. November 19, 2023. That's when of course, there was a World Cup loss, and of course, we have been haunted by that ever since. But of course, on that sanguine note, let's kick off our show as well. We've seen 2 straight days of losses on the Lal Street. Today, of course, the GIFT Nifty isn't looking all that encouraging. But, let's see how things really pan out, given the fact that earnings haven't been all that bad this time around. Let's see if the bulls can really fight back and make a comeback today and kick off November on a sweet note or not. Lots lined up over the next 1 hour. We will, focus in on all the stocks and news. Auto sales, of course, came in over the weekend. Record sales figures. Autos will be in focus. Let's see whether autos can steer Nifty higher today or not. Your stock-related queries will also be in focus. Keep them coming in on our live feed. We'll get them addressed as well. Before we move any further, quickly take a look at the top headlines at this hour. US futures rise after Wall Street closed out October with solid monthly gains lifted by optimism around artificial intelligence, upbeat earnings from major technology companies and easing US-China trade tensions. Asian markets, although, were mixed last I checked. The Nikkei is shut on the account of a public holiday. The GIFT Nifty, as I mentioned, is indicating a 50 to 40 point kind of lower start for our market. Crude inches higher after the OPEC Plus agrees to halt its ongoing production hikes in the next quarter amid concerns over a looming supply glut. Military escalation in Venezuela also outweigh worries of an oversupplied energy market. Meanwhile, gold continues to fall as investors dial back Fed's rate cut bets, but the yellow metal gains for a 3rd straight month. Record sales for Motown in October, driven by festive sentiment, GST cuts and pent-up demand. Ashok Leyland and Tata Motors outperform in the 4-wheeler segment, while 2-wheeler sales for TVS Motors, and Eicher come largely in line. In key earnings today, 4 Nifty companies due to report earnings. Watch out for performance from Bharti Airtel, Titan, Tata Consumer and Power Grid. And indeed, a Chak De moment for India with the women's cricket team clinching their maiden women's ODI World Cup title. Deepti Sharma and Shefali Verma star in a thrilling victory over South Africa. All right, quickly recapping last week's market action for you. We snapped out of a 4-week gaining streak. Sensex Nifty, they were down by 0.25% last week, but PSU banks, they continue to outperform. Last week, they were big outperformers. The entire PSU bank index was up 5%. Autos, pharma and IT were among the laggards for last week. But today, of course, autos will be in focus after record sales figures for October. Let's see whether they can see a turnaround and in fact steer the markets higher as well. 30 Nifty stocks moved higher last week. SBI Life, JSW Steel, Tata Steel, these were among the gainers, but Pharma was out of favor. Dr. Reddy's, Cipla, even Bajaj Finance, Kotak Bank, these were among the top laggards last week. On Friday in particular, we gave up 25,800 mark amid selling pressure. In fact, last 3 days of 3 days of the last three first days of the last week, Monday, Tuesday, Wednesday, we saw gains. Thursday wasn't great, and Friday as well, we ended in the red. 40 Nifty stocks closed in the red on Friday amid broad-based fall, and Eternal was among the top losers on the Nifty after Swiggy's second quarter numbers. Swiggy is also going to be, mulling a fundraise. I think tomorrow is the day when they do that. So ahead of that, Eternal was among the top laggards. Hospital shares were also under pressure. Cipla, lowered its FY26 margin outlook. Because of that, was among the top laggards. In terms of other cues, of course, Maruti reported numbers on Friday. They were largely in line, but the stock, of course, cooled off. In terms of the options cues, put call ratio dropped further to 0.64 vis-a-vis 0.7 in the previous session. Now this is the lowest level since September 26th. India VIX is in focus. Mind you, it has climbed back above the 12 level, closing 0.7% higher, and it's above the 12 mark, right? Its highest level since the 28th of August this year. In terms of fund flows, foreign outflows kind of had abated, but now last 3-4 sessions again we've seen FIS selling come back. In fact, FIS net sold stocks worth 6,700 crore rupees in equities on Friday, and domestic buying continues with 7,000 crore worth of stocks bought in the cash market. Of course, earnings wise, 4 Nifty earnings will be reporting numbers. This week is crucial for IPOs as well. Because we have the Lenskart IPO that's open, Groww IPO opens tomorrow, Pine Labs IPO as well opens later in the week. So lots happening on the IPO front as well. And how should you, as a retail investor, navigate the IPO rush? We'll get you a big voice and pose that question to him, and of course we'll get you insights on that as well later on in the show. But for now, let me bring on board our guest for today. On the technical side, Rajesh Palviya, Senior Vice President Research, Head Technical and Derivatives at Axis Securities. Lovely chatting with you this morning, Rajesh. We have been trading in a range of 400 points. Last week we snapped out of a 4-week winning streak. What does it look like? Do you see the possibility of the 2-day losses being reversed today? Also the fact that it's a truncated week.
Good morning, Nandita. So this is the second consecutive week where we have seen that Nifty consolidated in range only and remain in very tight range. Like after a strong rally in month of October. Looking at overall scenario, if I analyze the broader market, most of the large cap, mid cap have rallied quite much in previous month, but some profit taking at higher level is a healthy sign for the market, as 26,000, 26,100 is having major call concentration area. So Nifty not able to surpass that concentration area. But we believe that if Nifty continues to trade about 25,700, 25,600 zone, I think trend is likely to exhibit on the bullish side. And maybe once we able to take out about 25,850, 900 zone, I think there is a high possibility that we may again resume continuity of uptrend, and maybe Nifty could attempt to move to all-time high trajectory also going forward, as there is no as such a disappointment till now from the earnings also. So I think confidence is coming back on street, and the way the global markets are also showing sign of strength. I think our markets are also behaving in line with the global market, and I think maybe we could see after a brief consolidation, Nifty would attempt to give breakout on the higher side, and maybe we could see Nifty to cross 26,000, 26,200 going forward. So buy and decline would be our strategy on the downside. 25,600 needs to keep as a stop loss. Bank Nifty is looking quite interesting again, though it's again second consecutive week for Bank Nifty also in a tight range. But looking at the overall scenario for Bank Nifty, most of the large cap bank as well as especially PSU bank have managed to give breakout on the near term short term structure. And looking at the overall constituents of the bank nifty, we believe that here we could see a continuity of uptrend. Once bank nifty manages to cross above 58,000 level, we could see a rally to unfold towards 58,500, even 58,800 on the higher side. So here also we believe that till bank nifty is holding above 57,400, 500 zone, any minor decline should be used as a buying opportunity for bank nifty also.
All right, any minor decline should be used as a buying opportunity for the Nifty Bank Index. But which are the private sector banks that you're liking? Is the tilt more towards large caps or mid caps? Given the fact that we've had a rush of global capital, right, when it comes to smaller banks like Yes Bank, RBL Bank, etc. Which ones are you leaning towards? And secondly, the PSU Bank Index has been a rank outperformer. Last week, the entire basket was up 5%. This week, we have SBI in focus. Numbers come out later this week. So, what's the play when it comes to the PSU bank lot? And what's the positioning like on SBI before numbers?
So definitely banking is a space where we are holding our bullish view, and the way most of the private PSU bank have done well, we believe that after a brief consolidation again, there is a high possibility that continuity of uptrend would be there for most of the PSU as well as private bank also. From private bank, we like RBL Bank at this juncture. The way stock managed to give breakout, I think here we could see good traction going forward, and possible really in RBL Bank, and we can see towards 345, 350 kind of zone. So buy on decline would be the strategy in RBL Bank from private banking space. Again, there is some sign of buying interest in IndusInd Bank from the lower level, and stock looks to looking attractive at this juncture. Risk to reward is in favor, so 775 is the stop loss to buy and accumulate IndusInd Bank. Also, any breakout above 810 can attract more buying action, and then possible rally can unfold towards 840, 850 zone also. But PSU banking basket is looking more attractive compared to a private bank at this juncture, be it SBI, be it Canara Bank, Bank of India, Union Bank. All these banks have done well, even Indian Bank. So I think most of the PSU banks are, showing sign of strength on the near-term, short-term chart. So I think here we could see more continuity of uptrend. If I had to pick one stock from PSU banking basket, so I think Union Bank would be my choice at this juncture, as fresh breakout was there in previous week for Union Bank. And I think if it continues to hold above 144, possible really towards 160 we may see in the near term perspective.
Hmm. All right, Union Bank, preferred play. When it comes to banks. But let's talk about autos as well. I think we just have 2 minutes to go. We'll talk about autos a little later. Rajesh would like to get in your recommendations for the day first.
So I think lot many stocks have done well in last couple of week, and looking at the overall structure, we believe that one can focus on Laurus Lab from pharma space. That stock is showing sign of strength and continuity of uptrend is there. The way stock is moving in higher top, higher bottom formation, weekly charts are showing sign of strength. So 935 needs to keep as a stop loss on the higher side. Once a stock crosses 965, really can unfold to a 990 zone. So Laurus Lab is our first stock. Another stock where we are focusing is from capital goods space, that is Cummins India. Here also series of higher top, higher bottom formation and fresh breakout has been seen on the stock for on the weekly chart. So one can focus here also for upside target of 4400 to 4440. On the downside, the 4290 needs to keep as a stop loss. And from banking basket, Canara Bank is looking attractive. So we are projecting target of 145 to 148. On the downside, 134 needs to keep as a stop loss.
All right, all those stocks, keep them on your radar. But we are off to an extremely flat start. The first ticks coming in are just about 3 odd points higher. So we have opened above that 25,700 mark. Contrary to what the GIFT Nifty was suggesting, it was suggesting a downtick of somewhere around 40-50 points. So we were in fact bracing for a start below that 25,700 mark, but thankfully that hasn't really happened. We are towing the positive line, just about clutching onto the positive zone. No big moves either on the upside or the downside, so that's something that we'll take heart from, especially given the fact that we are coming off two straight sessions of losses. But the mid cap index is outperforming at the juncture. It's up 0.2%. The breadth is also in favor of gainers as we speak, but we'll have to wait for it to settle down a bit to really call it a trend. But for now, it's 3:2. That's the NSE advanced decline ratio at the current juncture. The Nifty Bank Index extremely flat, but has started off on a positive note. Here, of course, as Rajesh pointed out, it should be a buy on dip strategy that should be adopted. But let's take a look at some of the other sectors then. As to which are the pockets that are leading from the front and providing some support to the index. Of course, it's the PSU Bank Index continues its upward move, right? It's up almost 1%. Remember, it's coming off a good week. It was up 5% last week, and this week as well, the PSU lot will be in focus given the fact that the banking behemoth SBI will be reporting numbers later this week. Metals, were among the top gainers last week as well, and today as well, they are extending their gains, 0.5% gain on the Nifty metal pack as well. Autos, they are coming off a very flattish week, and given the fact that we've seen good sales figures for the month of October, record sales figures, so to say, we are seeing a 0.5% uptick on the Nifty auto pack as well. Autos had come under a fair bit of selling pressure, some bit of profit taking mode in the last 10-11 sessions or so, but now good traction coming in on the auto pack as well. Real estate also doing well. Banks, as I mentioned, flat but trading in the positive zone. What's not doing well, the likes of FMCG, IT and pharma as well, no big moves there. FMCG will be in focus today as well. Godrej Consumer reported numbers on Friday, tad below expectations. Today, Tata Consumer will be in focus as it reports numbers. Aside of that, you have IT, that's the top laggard, almost 0.5% kind of a downtick there. So that's one sector that's out of favor at the current juncture. Let's take a look at some of the individual movers then. Shriram Finance. This stock is the top mover on the index, 4.5%. I think numbers came out. There are some brokerage notes as well. We'll go through them, as we move along. M&M was among the top laggards last week. But today, of course, among the top gainers, 2% gains coming in there. We'll talk about the auto sales figures in just a bit. Tata Motors passenger vehicles also up 0.6%. SBI ahead of numbers up 0.6%. Grasim, Eicher Motors, JSW Steel, Reliance Industries as well, trading with mild gains. What's not doing well is Maruti Suzuki. That stock is down almost 3%. Maybe some further profit taking here. Numbers are fairly good when it comes to the sales figures. Eternal extending its losses. Titan ahead of numbers, down 1%. BEL, good numbers. The stock is under some bit of profit taking. ITC, NTPC and Nestle India, some of the other names that are out of favor. Quickly take a look at some of the Nifty 500 movers as well, as to which are the stocks that are making waves in trade, because although index has been trading in a range, it's really been about individual stories and they have been reacting fairly strongly to their earnings, right? So I just want to see which are the stocks that are taking the limelight. Intellect Design, that stock is up 6.5%. Top gainers on the Nifty 500 index. RR Kabel, that stock is up 5%. Godrej Consumer, numbers weren't all that great, but the stock is up 4.5%. Bank of Baroda, commentary was good, numbers also good, up 4.5%. And Zentech, I think some order win, and the stock is up 4%. Navin Fluorine extending its gains, 4% higher on that stock as well. But we were talking about autos, Rajesh. Numbers came out fairly well for October, driven by festive demand, pent-up demand, GST cuts. Maruti Suzuki, Hero Moto, these are some of the names that regained their top spot. Tata Motors reported higher retail sales versus M&M and Hyundai for a second straight month. In fact, Tata Motors saw second highest car sales after Maruti for the second straight month. Maruti, of course, total sales were up 7%. Domestic sales were up 9% on a year-on-year basis, but exports were down somewhere around 6% or so. And Hyundai Motor total sales came in almost at 70,000 units. Domestic sales at 53,700 units. And Creta and Venue, these achieved second highest combined monthly sales. M&M, of course, good sales figures. Auto sales were up 26%. Exports were up 15%. Tractor sales also saw double-digit growth of 13%. But we are seeing some divergent moves when it comes to autos, right? Maruti top Nifty laggard, Tata Motors, M&M among top Nifty gainers. What would you make of these divergent moves?
So I think we have already witnessed a strong rally in most of the auto stocks in last couple of week. Yes, some profit taking at higher level, but still looking at the near term, short term structure, we do believe that again there would be a resumption of rally in most of the auto stocks, as long term structure is looking bullish for most of the large cap auto basket. From two-wheeler basket, we do hold bullish view on the Hero Motor, and we believe that after a brief consolidation, again there would be a resumption of uptrend and possible rally towards 5,800, 6,000. We may see going forward for Hero Motor. So here we are holding bullish view till stock is trading above 5,400. Any minor decline should be used as a buying opportunity in this counter. Again, there is some profit taking in Maruti post numbers. So stock is now available near to its 50-day moving average, which is placed at around 15,500, 550 zone. So if stock manages to defend this level in this decline, so I think again we may see some pullback action from those levels. So 15,550 needs to keep as a important level as a stop loss if you are a trader. So that level needs to watch closely. Again, Tata Motor, as we have seen, some recovery from lower level, but now stock is consolidating since last couple of trading session in tight range. So any breakout above 420 can take this stock further higher. Till the breakout is not happening, I think we may see some range bound activity towards 390 to 420 would be the range for the counter. Either side breakout may decide the major direction for Tata Motor also.
All right, that was about Tata Motors. But we have a query on our feed, from Nana Prakasam, and he wants to know whether Tata Motors or M&M, out of these two, which one is a better bet for the short term? What would your advice be?
So for short term, M&M would be a better bet as a long term structure. Short term structure is bullish for the stock. Series of higher top, higher bottom formation is taking place in this counter. Stock is holding above its strength on the long term chart. So this decline is giving you opportunity to buy for short term as stock is holding near to its 50-day moving average. So I think with stop loss of 34.90, one can buy Mahindra and Mahindra. I think once stock crosses about 3,600, I think we could see furthermore upward momentum towards 3,680 or 3,740 kind of zone. So M&M is looking attractive compared to Tata Motor at this juncture for short term.
Okay, M&M looking more attractive. Hope that answers your query. I just saw another query on one of the auto stocks, so just thought might as well get it addressed here itself. JBM Auto, can't get the gentleman's name. If you could write your names along with your queries, that will be great. JBM Auto, that's the query, and the buy price is at 697. Wants to know whether it should be held on to, or should he exit and buy Eternal at CMP. In talking about Eternal, there is another query on Eternal from Marcuse, and he wants to know whether Eternal should be bought for the short term and what should the target be. So let's address these two queries. JBM Auto, 697 was the buy price, so making a loss here, and whether a switch to Eternal is advisable, and the other gentleman's query on whether Eternal could be bought for the short term and what should the target be.
So first of all, there is no correlation between Eternal and JBM Auto. I'll give you individual view for both the stock. As JBM Auto, if I need to choose from the technical perspective, I'll choose Eternal. Uh, as the long-term structure for Eternal is bullish, though some corrective move is taking place in this counter since last 3-4 week. But looking at the longer term picture, I think till stock is trading above 305, 300 level, our trend is still intact on the bullish side for short term as well as for the medium term perspective. So this decline one should use as a buying opportunity in Eternal. On the downside, 295 needs to keep as a stop loss if you are buying in this decline. If I describe JBM Auto stock is recovering after brief consolidation from lower level. Now stock is trading near to its 20-day, 50-day moving average. On the near-term chart, 695 is the key hurdle for the stock. Once stock crosses that level, then some recovery trade we could see in this counter, and then on the higher side, 720, 730 would be the next target. So if you are already on the long side of trade, you should follow the stop loss of 650 if you are already bought this stock for JBM Auto.
Okay, that's about JBM Auto and Eternal. Of course, no correlation, but I think traders are spotting or looking for an opportunity to enter Eternal, given the fact that it has seen some bit of correction. So perhaps looking for a trade there. But let's talk about some of the other queries as well. Since we are talking about it, Bharti Airtel. Want to talk about this one, given the fact that it is going to report its earnings today. Preeti Singh wants to know whether it's a good time to enter Bharti Airtel, and there is some query from Pravesh Chauhan as well, who wants us to address Airtel. Of course, the stock has seen a good run, but since Wednesday, it has seen some bit of a correction. Is this a good buying opportunity, and what are the next levels to watch out for here? It's not very far from its 52-week high.
So definitely Bharti is a stock where one should always try to accumulate this stock whenever stocks gives you opportunity in a decline. As the long-term structure is bullish across all time frame, stock is holding the strength and stock is almost trading near to its all-time high trajectory. Stock is trading comfortably above 20-day, 50-day moving average, which is also sign of strength on the near-term charts also. So yes, if you are looking to buy and accumulate, yes, you should use this decline as a buying opportunity. Even in decline stocks, if you get opportunity around 2000 level also, that's again attractive level in this decline. So that level needs to watch closely. Buy and accumulate would be a strategy. 191980 needs to keep as a stop loss. On the higher side, once stock crosses about 2090, 2100 level, I think we could see a higher target towards 2200, even 2250 for Bharti Airtel.
Okay, expect higher targets on a Bharti Airtel. Hope that answers your query. There are a couple of queries on some banking names as well. Canara Bank is among the top recommendations from Rajesh. Perhaps you could, rewind a bit and see what kind of targets, etc. he's mentioned. There are some queries on a PNB as well from Praveena Jain. Wants to know the target on that stock. And in terms of other banks, don't have this person's names, but wants to know your thoughts on South Indian Bank after the recent run up. It has consolidated a bit. What's the level for any fresh position for upside? Talk about PNB and South Indian Bank now, Rajesh.
So PNB is also in uptrend. This is the third consecutive week where stock is making higher high low formation. Stock is in bullish trajectory. Stock managed to give breakout on the near term, short term chart. So looking at breakout, we do hold bullish view till stock is trading above 119. Trend is likely to exhibit on the bullish side. Once stock crosses over 126, I think we may see a near term target towards 134 to 136. So PNB one can buy and hold with stop loss of 118. For South Indian Bank, yes, there is a rally, and now after this rally, there is some profit taking at higher level. But still, if I analyze on the near term, short term structure, trend is still on the bullish side as breakout levels are intact for the counter. Though the stop losses are little far from the current market price, so if you can follow a stop loss of 33, then you may remain on the buying side of trade, or you can trail your stop loss if you bought at lower level. So 33, 33.50 is the important support area. If it continues to trade above this level, I think we may see again another rally in this counter. And once stock crosses above 39.50, the higher target we may see towards 44 to 46.
Hmm. Okay, that's the view. Hope that answers your query. Last few queries then. Uh, Take up a query on NTPC. Naveen has written in, and there's another gentleman, who wants to know about NTPC. It has had a fairly choppy ride, NTPC. But still, the returns have been on the negative side. If you look at the last month, last 6 months as well. Uh, any clear trend that's emerging, and is it a good positional play at the current juncture?
I think still stock is in consolidation only. If I analyze the last 2 month, behavior of the counter, it's in consolidating in range only. On the higher side, the major hurdle is placed at around 350, 55 zone. Stock attempted to cross that level, but not able to succeed. On the downside, the a crucial support or important support for this consolidation is placed at around 120, 328, 330 zone. So I think we could see further more consolidation in this range. Only 328 to 350 would be the major range for the counter. Looking at the price behavior, we believe that once stock crosses about 350 55 zone, a rally can unfold toward 365 to 370 also. So those who are already bought can hold the position with stop loss of 328.
Okay, that's the stop loss, and that's the view on NTPC. Query on I think Schaeffler India from Satya CK wants to know your thoughts for the next 1 to 3 months. Holding a few shares at the rate of 4,000, so he's making some profit. But with a 3 month perspective, how should one navigate given the fact that the stock did see a great run last 6 months, saw some correction, but now it seems like it is resuming its up move.
I think he may hold on the position with a stop loss of 4100. After a brief consolidation, stock managed to give breakout of 20-day, 50-day resistance area. So looking at breakout on near-term chart, I think 4100 needs to keep as a stop loss. If it's a hold these level, possible target towards 40 to 51, 4300 we may see in the near-term perspective. So Scheffler is a buy and a hold at this juncture.
Okay, hold on. A buy on hold, that's the call on a Schaeffler. There's a query that has come in from Aisha, and she wants to know your thoughts on MSTC. Short term, she wants your short term view. The stock has been in a steady uptrend. I think not exactly a steady uptrend. It has seen some bit of volatile moves in the last 1 month. MSTC at 542. What's the short term view?
So, stock is consolidating since last couple of week, not able to give breakout of this consolidation. 560 is the breakout level on the higher side. If stock able to give breakout above 560, then really can unfold towards 580, 585 zone. That's the next target above 560 zone. At this juncture, I would suggest if you are already on the long side of trade, 530 or 528 needs to keep as a stop loss if you bought it for trading point of view.
Hmm. Okay, take note of those levels. Last query then, and this one's coming in on an SBI Life from Komal Makecha. Wants to know whether it's a good time for a fresh entry in the stock with a medium term perspective. The stock has seen a good run in the last month or so. It has seen a good 9% up move since the 24th October itself. It has gained 6%. Good time to take a position, given the fact that it's very close to 52-week highs as well, almost knocking at that level now.
So stock is strong across all time frame, but if you wish to buy it for medium term perspective, so buy and accumulate would be the strategy. Don't buy at one go as stock has already run up in last couple of weeks. So if you get opportunity to buy and accumulate this counter in a range of 1950 to 1900 would be a good level to buy and accumulate. On the downside, 1870 needs to keep as a stop loss. Once stock manages to cross 1980, I think we could see a higher target towards 2050, 2100 going forward for SBI Life. So yes, stock selection is good. Buy and accumulate would be a strategy. Don't buy at one go as stock has already run up in last couple of weeks. So wait for minor decline to add more position.
Hmm. Okay, wait for declines to add to your positions. Of course, the stock has already seen a fair bit of a run up. That's the view on SBI Life. And that, of course, wraps up our query segment for today. And Rajesh, would like to thank you for joining in, sharing your thoughts, and of course, helping our viewers with their stock related queries as well. Look forward to our next conversation as well. Wishing you a very happy and prosperous trading day ahead.
Thank you. Thank you.
All right, before I bring on board my next guest, quickly take a look at the market. We have slipped a little bit because we are sub 25,700 levels now, 35-point cut on the index. Sensex as well, down almost 200. So it's a third straight day of losses on the benchmarks, but the broader end of the markets are holding firm. The mid cap index is up, over a quarter of a percent, and the bank nifty also clutching on to the positive zone 57,800. We are trading above that level, and the breadth as well looking firmly in the green right now. Autos, of course, gaining on the back of good figures, sales figures for the month of October on the back of the GST reforms, of course, festive rush and pent up demand as well. But to understand the texture of the market going forward, and of course which are the sectors looking good, what should the investment strategy be going forward, let's bring on board a big market voice. Joining me is A. Balasubramanian, MD and CEO at Aditya Birla Sun Life AMC. Mr. Bala, great chatting with you as always. There's been some developments when it comes to the trade wars, right, between US and China. There's been a truce of sorts. Of course, then there was a hiccup last evening as well when Trump said that China knows the consequences if they take action on Taiwan. And this morning, him stating that they have assured him that they will not take any action on Taiwan. So, my question is, although there is no update as such on where India-US trade deal is headed, but given what has transpired last week, do you think we have seen the peak of the Trump tariff tantrums now? What's your sense?
Looks like to me, Nandita, I think the way the last few months, the US government has been discussing about this lesser and lesser than the earlier occasions. That's something they are now trying to find a common solution. The way they have gone about building the relationship with China and finally agreed for things which are more idealistic kind of things. That's something I see as a big change in the approach that they are taking. The last 2 3 months again, the way they have played around the geopolitical side of the story, and also the continuous dialogue on which they actually getting they're not getting finalized, but something they are now finding a mid path. I think India too. My own belief is we should be able to finalize something by whatever I get to hear from people, may not be really in the know-how of what's happening, but at least make an intelligent guess. All such people, when I talk to them and I see and hear and understands, clearly I think we are heading towards some bit of a neutral path, wherein the initial worry that used to exist that India could potentially take a hit because of the Trump tariff announcement. I think after seeing what they have done in China, and also after seeing the way the statements are being made by US on India relationship, both as a country as well as with the Prime Minister Narendra Modi. I think all of them, I think, would lead to a better outcome It's just a question of time for this to get materialized. I think November 10th, I think, is the date on which it is coming for hearing in US. So my own gut feeling is we might see something before that as well.
Okay, we might see something there as well. But from an Indian market perspective, we have seen quite a bit of a comeback in the last few weeks. In fact, we're not very far from record levels as well on the benchmarks. But if you look at the Nifty Next 50, that's still 10-12% away from lifetime highs. Small cap index is also 5-6% away. If there is a rally here on, would you expect mid caps to take the lead, or would you expect large caps to continue doing well?
The way I see Nandita is one, the I think lot of steps were taken by the both the government by way of GST cut, as well as by Reserve Bank of India by way of interest rate cut. And it was done well ahead of time. If you remember, the month of July itself, RBI cut the rate and saying we are doing everything to front load the rate cut so that the rates can come down, the spending can go up. In fact, this time the festival season, though it actually turned out to be a short festival, all came in the 1 month, the month of October. But having said that, clearly there is a positive sentiment that has come. Second is the second quarter numbers, which I think September quarter numbers, which is being reported by most of the companies, are either in line with expectations or even better than expectations, which essentially means the guidance for the next few quarters seems to be better than the previous quarter or maybe the current quarter. So this again boosts to the overall sentiment. And the festival season impact will start reflecting in the December quarter and even the subsequent in the March quarter. So therefore, we are in the uptick. Having said that, index is, as you rightly said, about 7-8% away from the earlier peak. My own feeling is we will see by December, you will see the market touching a new high. Not for any other reasons. So the building up that is happening on the result side. I think as the company starts reporting with results better than the analyst expectations, which what my own gut feeling is we'll see that upgrade of earnings will come as one of the reality as we move forward, and therefore that should keep the overall market sentiment up. I think what would drive the rally, the while the of course Sensex and Nifty are driven by the top 50 companies or 30 companies. But you'll also see the breadth in the market widening because there are two, three things which has of course happened is one, government investment booster that has come. Second is public sector. Now they are talking about structural reforms on the public sectors by way of allowing FDI investments in the public sector companies, and they can go up to 40. But the discussion is on. So whenever such discussion happens, definitely there are positive reforms. I think that what Prime Minister is talking about, we should now think about next round of reforms. My own feeling is the next round of reforms will come in the not necessarily through a privatization route, but way of getting into a strategic partner with international companies on core areas such as defense, agriculture, and technology, and so on and so forth. Even the banking and financial sectors, we will see. Therefore, unlocking a value could happen as you see the valuations linked to the numbers versus P numbers versus rest of them. If you see, there's a high probability that some bit of re-rating story also could come for India. And as we move into January next year, calendar year, I think the expectation of US rate cut also will become real. As the interest rates get cut and the short-term interest rates, the money market rates in US come down, you will probably see the money starts coming into the emerging market. If US get caught into the low interest rates, relatively rising inflation or low growth kind of scenario, then people start looking at investing outside the US. Therefore, allocation towards India from foreign institutional investors may also rise. Therefore, overall sentiment, my own belief is equity market for 25, 26, rest of the financial year, and 26, 27 should be a period to look out for.
Sure. Just one point. You said market will hit a record high by December, right? I mean, just clarifying. I couldn't get that point quite clearly.
Yeah, very much I said December because we have actually the build-up is pretty good. Earnings have been pretty good and the earnings are decent. The narrative is coming for companies
Yeah.
for the next 2 quarters. Earnings are also good. Therefore, you will start seeing the upgrade of earnings coming in. And what was being done, they are more in
Sure.
the form of next round of reforms, which I mentioned about regulated today, whether it is SEBI or RBI. everyone is actually looking at ease of doing business should become the total mantra, given the fact that systems
Hmm.
efficiency in terms of agility or vigility have gone up quite significantly. And there's a good time to actually come out with reforms, which could
Hmm.
be making the doing a business will become much more easier. And this I see it coming from all regulators. I would also
Hmm.
presume will start coming from IRD also, which is another insurance regulator. Also, I have got the task actually to revamp
Hmm.
the insurance sector and take it to the next level of growth. So that in that sense, I'm saying you will see a lot of positive things
Hmm.
coming together and therefore drive the sentiment and therefore drive the market to new high.
Hmm. Sure. Okay, a lot of reforms, and we'll talk about which are the plays, in anticipation of those reforms. But let me first ask about foreign investor inflows, right? Because we did see a baiting of the sell-off, but last 3 4 sessions again they have accelerated, especially after the Fed's hawkish tone, right? When they've said that a December rate cut may not be a given. Do you think could be a deterrent when it comes to FIs making a decisive comeback to the Indian market? Because earnings, as you mentioned, have been far ahead of muted expectations. In terms of valuations, are FIs getting okay with Indian valuations now? And secondly, if a rate cut doesn't come by in December by the Fed, do you think that will be a deterrent?
Maybe it could delay the flows. I think I am not see as a deterrent. Definitely, the faster the money comes, which you are looking at this point of time, may get delayed a bit. At the same time, valuation is something. It's a function of growth expectations. As long as we are able to outbeat the expectation of growth, I think today, while the GDP growth is coming, given the fact we have a low inflation, the
Hmm.
nominal GDP is less than is in a single digit. So the moment the nominal GDP goes to say double digit, close to about 11 to 12% kind of nominal GDP,
Hmm.
then naturally the expectation of growth on a risk adjusted on a risk added basis will come anywhere between 14 to 15%. We have to get to that kind of number from a earnings growth expectations point of view. That I think in my view is a moving part. I think it
Hmm.
will start coming in. And second is from FI's point of view, they continue to make money in the rest of the global market, especially China and the US, and therefore, as long as they are able to see some kind of money being made in those markets, they may continue to stick to that investment in those places. But having said that, once India starts outperforming from the economic growth point, this time what I see is the economic growth actually perform before even the market, and that's the way I think we'll see probably the catch-up game coming in
Hmm.
the market, which I think will be driven by the foreign institutional investors, I would assume,
Hmm.
in addition to what we are doing in the domestic market.
All right, that's the view then. But fair point. Let's talk about the earnings season as well. The second quarter earnings season, whatever we've seen so far, expectations were very muted. But in anticipation of muted expectations, uh, numbers have been fairly good. In contrast, so to say. Which are the pockets that have stood out for you and which are ripe for re-rating, as you mentioned? Which ones should one look at, especially after the second quarter numbers?
I think there has been extremely good numbers coming out from banking financial sector, especially NBFCs have been reporting good numbers. We are already seeing credit growth is actually outpacing the deposit growth. It's a marginal gap, but definitely it's a trend and better capital adequacy positions. They're ready to grow to the next level of growth, and therefore some bit of re-rating come earnings-led growth is also coming. And even some of the PSUs banks have been reporting good numbers with the reduction in the provisioning. At the same time, overall the margins have
Hmm.
been intact, and they're able to so far able to grow the lending book. That's something I see. And second is auto sectors have seen reasonably good positive vibes, especially month-on-month sales. If you look at it, either they are stable or higher, and it's not something
Hmm.
which is down, which is again good sentiment. And consumer durable sectors, we are seeing some kind of numbers getting better. Again, thanks to the consumption-led growth that you are witnessing. Defense sectors, again, reporting good numbers. I think it's quite mixed. So I think the way I see is instead of looking at which are the companies reporting, which sectors reporting good numbers, are we seeing any kind of
Hmm.
sectors which are doing very badly from the overall perspective. That doesn't seem to be the case as it stands today.
Hmm. My question is, we've seen record sales figures for autos in the month of October. Festive rush, pent up demand, GST cuts, everything, all this trifacta kind of played out well. But beyond the festive season, do you think it's sustainable? And also the fact that autos have already seen a good run up ever since we heard the Prime Minister, announce GST reforms on the 14th or 15th of August. Since then, we've seen a fair bit of run up. How much of it is in the price already? And is it a good time to enter some of these auto names?
It is while the pent-up demand came for two reasons. One, of course, the GST announcement was made that it will be cut on the Independence Day announcement. Therefore, it had some kind of pile-up of the demand not coming in that point of time. Only inventory got built up, but demand was not there. Suddenly, we saw demand coming in the month of October during festival season. Second is also being supported by two, three other things. The GST cut
Hmm.
is a permanent. That means the price reduction is going to be permanent. It's not temporary. Therefore,
Hmm.
people will see as long as it's affordable, it's falling within your price. I think consumer mindset will change. Secondly, from a consumer point of view, consumer lending growth, which had gone for a toss last year for a variety of reasons, now this coming back. Therefore, your ability to tap the loan segment from the whether it is NBFCs or the banking systems, I think is likely to happen big time. So therefore, money will be available for one to do EMI
Hmm.
based investment or buying behaviors. And third is agriculture
Hmm.
income. I think because of the good crop output this year, I think agriculture outcome has been pretty good, and government has been procuring the producers at MRP prices, which also increase income in the hands of people. Except a few states like Punjab and a few others where they had damage to the crop due to the
Hmm.
unexpected rainflows as well as flood. But otherwise, in general, rural economy continues to do well. And fourth is due to the election kind of things in few states, there has been a big ticket announcements on reforms
Hmm.
are being announced. I just saw some announcement came from states like Andhra Pradesh, state like Bihar. They are making a huge announcement on economic reforms. The way UP did last few years back. So today they are one of the largest contributor. We are already seeing this coming from states like Maharashtra, Tamil Nadu, Karnataka. Therefore, if you look at the state-led growth on public infrastructure spending, as well as inviting companies to set up industrial parks in these places, also seems to be actually be the driver on the overall economic momentum. I think the what we need at this point of time is the nominal GDP is to be somewhere around 10 to 11%. Therefore, the earnings will start reflecting above the two-digit number. That's the only area where there has been some discussion around.
Hmm.
Therefore, from an income level point of view, we are seeing actually a rising income level. And finally, they have also announced the 8th pay commissions, which is supposed to hit the market sometime next year. They have already given some kind
Hmm.
of hint in terms of 8th pay commissions out there looking
Yeah.
at. Therefore, the large pool of government employees are also one of the driver of the consumption growth in the country. Will also probably start building up their aspiration getting fulfilled by spending a little ahead of time. Yeah, on expectation, 8th pay
Hmm.
commissions will also increase the money in the hands of people. I think variety of things, if you look at it, they're all ready and something very strong from boosting the consumption-led growth point of view. So that is why I see the auto sales number, what you're
Hmm.
saying, it will not be temporary for a month. I think it's going to be the demand will keep rising as the cost of these vehicles or maybe cost of these goods remains at affordable level.
All right. But is it safe to assume that the passenger vehicle segment, which was seeing a lot of pain, has turned the corner in that sense?
Yes, I think that we are seeing some of demand coming back. I think the only area among the auto sectors, two-wheelers seems to be doing well, passenger vehicles seems to be doing well, and tractors seems to be doing well. I think commercial vehicles,
Hmm.
because of for variety of changes that has happened over a period of time, because of higher tonnage vehicles and so on and so forth. I think there we see a marginal slowdown. Not marginal slowdown, it's a flat growth. There also is a function of how the economic growth is coming back.
Hmm.
Yeah. In government spending, also in my own belief
Got
is
your point.
government spending also will lead to yeah.
Sure, sure. Please go ahead.
No, I said government spending also is coming back because they are also one of the major drivers of the pickup coming from auto sectors, especially related to the defense kind of spending and so on and so forth. So for that also should lead to the added benefit that can get accrued to this segment of the industry.
Hmm. Got your point. You also alluded to, the banking universe, the banking and NBFC universe. What's the order of preference there? Because PSU banks have been outperforming, and how? And numbers have been also fairly good. Private players have also reported good set of numbers. Also, there have been a lot of deals, a lot of hot money, coming into capital rush, so to say, global capital rush, in mid-sized banks like Yes Bank, RBL Bank, etc. So, what's the play here in terms of banks and NBFCs and within the banking universe as well? Are you tilting more towards mid-sized or large cap names?
Nandita, we have divided this into two, three parts. One is the large private sector banks
Hmm.
and the mid-sized private sector banks. Then we have a complete public sector bank, whether it is a large or mid-sized and public sector bank doesn't matter because they have all of them more or less the same, driven by the government. And the third is the NBFCs, which is large NBFCs and retail focused NBFCs, and the NBFC which is focused on the MFIs. I think if you look at the entire category, large private sector banks anyway are heavily owned, index weight exposure that everybody has got, and they continue to do well. So you will probably see they remain in the range of about index performer. But at the same time, as you go down, given the fact that Reserve Bank of India is now it's quite open for FDI investment to come into the private sector, smaller private sector banks, which
Hmm.
essentially means the more the people coming to these kind of banks, there is high probability the capital adequacy will become better. They can participate in the lending growth quite aggressively as it picks up. Therefore, they will be able to actually grow a little faster than the major private sector bank. As far as risk, of course, they have to manage it. That is the only area where people have to be choosy in terms of which are the segment of the bank won't be able to take a risk adjusted return. They will focus very well. That's something called which has to be taken by the money managers. But having said that, that pie I think opens up differently because of the FDI investment coming in. In the NBFC's space,
Hmm.
there is again the growth has been pretty good. I think in the housing sectors, they have been the largest driver of growth. I think within the housing sectors, you have affordable housing sectors, then you have a developer financing and so on and so forth. It also provides with high, reasonably good margins. And they again, the MSME lendings as also, of course, big focus is there. For NBFC, if you look at it, you will find mid-sized to large size NBFCs will remain one of the big area of focus. At the same time, there is MFI business, which of course, having
Hmm.
seen 2 years of downtick, they made enough provisions to ensure whatever the loss they would have incurred. Now they are well capitalized, are coming back. So all of them actually will actually have a different kind of run and expectations. So ultimately, from market point of view, wherever there is element of quick re-rating would happen, that could happen on those sectors where this kind of incremental news is coming as a positive. We have FDI investment coming in, FDI getting opened up for public sector banks.
Hmm.
Therefore, some bit of value unlocking would happen. I think it's a mix of both. I think from a fund money manager's point of view, it's a tough choice
Right.
to choose which one to choose. I think we'll of course
Hmm.
play
Hmm.
index related stocks. We cannot ignore it. At the same time, continue to focus on stock picking in this segment, which I just mentioned about, to ensure that we have reasonably good presence, so that we on a holistic
Hmm.
basis we get better return than the index return as far as that sector concerns.
Sure. One big talking point last week was the SEBI's proposal to sharply reduce brokerage and transaction costs for mutual funds. I want your thoughts on it. How does this impact the industry at large? This is expected to put pressure on asset managers and, of course, hit institutional broker revenue as well, right? And there's been a lot of debate about how the sell side is generating more research, and people must pay for it. How do you really look at this? It's of course a proposal, but if it comes by, what is the impact that will be felt?
Unless until you put this in a consultation paper, one will never know how market will react. That's something SEBI has always been doing a great job in putting the
Hmm.
consultation paper, and they are quite open to listen to the ideas, suggestions, and then advices coming from the market players. Each one of them today I've got right to respond to them. But having said that, I think people are only looking at
Hmm.
only one part. I think TR they are talking about brokerage income. I think if you look at the holistically the circular that has come, it is a complete revamp of mutual fund,
Hmm.
the mother circular, which was issued in the 1996. Now they completely revamped. And there are a lot of positives that are coming in that. One was related to the compliance, governance, monitoring of risk, and launching a new products like performance based products you can launch, and then onboarding of customers. There are many such things they are addressing it through this circular. My own belief is once the circular is implemented on various other suggestions, I think it would be one of the best thing that could happen for the industry for it to go to the next level of growth. I think it's clearly that's an intent. Second,
Hmm.
the making all these statutory taxes fall outside the TER, which again one of the big demands has been there for quite some time. And finally, they are addressing this issue through the consultation paper. Assuming comes, whatever the statutory payment they are making, whether it is stamp duty, whether it is security transaction tax, whether it is GST or any other taxes, today all falls within the expenses, whether it's for broking firm or for the asset managers, they all falls in the same expenses.
Hmm.
That's also something will now fall outside the expenses. That calculation there is no ambiguity, and there is no different interpretation coming from different players. And coming particularly to the TR things, they do have mentioned that they would give some kind of compensation by of increasing the expenses. At the same time, they will also ensure that they will also be thinking about that it should be neutral to the industry, not to create any kind of imbalances in the industry.
Hmm.
That's something as an association, we all will take it up with the regulator. Every association, whether it's broking associations, whether it is mutual fund associations, even as a individual investors or market participants or market influencers, I think I'm sure all of them will give their input to a SEBI, and nothing is closed. And this is just discussion proposals. I would assume, going knowing SEBI chairman the way
Hmm.
they approach things as it stands today, I'm sure they will be quite amenable. They will quite be here, quite. They will give full hearing to the market participants and take the best call that would make it somewhat
Hmm.
neutral to the industry rather than creating any kind of big damage. As for asset management companies concerned, I don't think it will be big damage as it stands today. Going
Hmm.
by the feeling that is getting generated within the industry.
Hmm. So, what is it that you like within
Ideas
the
actually to bring in
capital
more
market
efficiency in
theme?
data.
Because I think last
Yeah.
week, sure, sure.
Yeah, I think you
What is it
continue.
that you like within the capital market theme now? Given the
I
fact
think
that the SEBI chief also alluded to the fact that they will not just remove, weekly expiry just like that. Last week he had made a statement like that. That comes as a relief for exchange stocks like BSC. And of course, AMC is also doing well now. Which end of the spectrum would you tilt towards when it comes to the capital market theme?
see, capital market is on the overall scheme of things, it's a smaller component. I think if you add up all these companies, whether it is asset management or broking or BSC or service providers in the capital market, and overall scheme of thinking, it's a sector which will continue to have great future. They'll become the large sectors, but not necessarily they'll be the driver of the overall market cap, because there are multiple sectors that would be the major drivers of the market cap. But I think capital market
Hmm.
sector will remain one of the sectors wherein financial savings in India is rising, and therefore, whether it
Hmm.
is mutual fund, asset management, alternate business, or broking, or even wealth management business, these businesses will continue to be the growing business. Given the fact the pool of investing in the market is rising, and more people are, of course, participating in the Indian capital
Hmm.
market, therefore remain as the sectors which will create sustainable growth over a period of time. But in terms of valuations, sometimes expectations versus valuations will change. But from a SEBI regulation point of view, as the market becomes bigger and bigger, one of the greater responsibilities they always have is to ensure the market functions with 100% integrity, with no scope for any kind of accidents, and it should function smoothly, effectively in all market cycles. For it to function efficiently, if they have take some kind of calls such as F&O market restrictions, or maybe putting a list or limit
Hmm.
on investors, participants, etc., that should come as part and parcel of the the overall evolution of the healthy market development. Therefore, I don't think we should actually crib about it. Because at the end of the day, whatever is being done, it is the best interest of the industry for it to go to the next level of growth without any accident or without giving any kind of unpleasant experience to the investors as well as to the system. So that's the one has to see it. In this process, if the price gets corrected, which also in my view is good, because sometimes market will expect huge things to happen, therefore rise the price levels pretty high, including multiples. And that is a natural impact of market for it to get corrected through this kind of intervention by regulator.
Right. Running out of time, Bala, just two more questions. First of all, the other big talking point last week was around, of course, we know IPO market has been extremely hot. And there's a raging debate in terms of Lenskart IPO valuations as well, right? Most of these, issues that are hitting the market are from the consumer tech space. This week we have Groww, Pine Labs, etc. And of course, Lenskart is open. How should retail investors, navigate some of these IPOs, especially at a time when they're commanding price, which is like 230 times, price to earnings. Your view as to how retail investors should navigate? Should they be paying such a price?
I would suggest retail investors should go through as mutual funds. I think the best option that everyone has got in front of them. Should I keep breaking my head in understanding how this business model will work and whether its valuation is right and so on and so forth. And then sometimes social media can create something is very rosy. Sometimes they can also make it some rosy one to become actually the worst as well. Both things can happen, right? I think anybody can influence anything in which way they feel like. I think opinions can always change from people to people. The assessment can change from people to people. But at least money manager like us will do our own due diligence. Sometimes we will make investments. Sometimes we may skip on either side. We may do. But the mutual fund is the best place through which retail investors should participate. But having said that, some of these IPOs that you're talking about, Lenskart, in fact, we ourselves got some allocation in the anchor book. I think we have done, I think the team has done an excellent job of doing the due diligence, understanding the business model, understanding the various ways in the business being built, and also look at the how the valuations of these companies will shape up as they become bigger in terms of earnings rising. See, sometimes you go the investment phase. Even opening a branch is investment phase. Opening your franchise is an investment phase. And you don't actually expect initially the profit to come for you to make investment. You have to invest for the profit to come. So every business has to be assessed in terms of how the profitability will turn up as the franchise become large. And that's why startup companies worldwide. I still remember Amazon was not making money for anybody for almost about 15 years, 10 years, I think. If you look at the chart of Amazon, anybody can see it in the screen. For almost 15 years, it was not making money. Just a matter of 4 years, actually, is actually caught up with all the things that they would not delivered in the last 10 years. They got delivered in about 4 years' time as the earnings starts coming in. I think all startup companies have to be looked at like that. But within that, of course, you have to look at the promoter as well as the promoter's commitment and their own skin in the game and how they're actually looking at building the business in order to drive the future growth more sustainable. And then pricing model as the volume picks up, pricing start delivering higher profit and so on and so forth. There are a variety of ways in which we have to look at it. But one good thing is we all as money managers the last almost 7 8 years have also gone through our learning phase of what to invest, what not to invest, where to skip, and how do you assess these kind of companies. That's something which has happened over a period of time. So learning curve is far better. Secondly, from a regulation point of view, I think the more and more issues are coming, they've also been ensuring nothing is left undisclosed. See, whatever Lenskart people are talking about it, is there anything new from what has been disclosed? Absolutely no. See, it's only a question of interpretation changes. It's completely disclosed in the offer document. They've been completely disclosed with the management, completely disclosed in various public forum through the discussions. There's nothing which is undisclosed, right? I think we have to only worry about something undisclosed coming in and we're able to discover it. And therefore, you can consider this as a damaging in nature. As long as complete disclosure is there, which is what my own belief is, SEBI has done a great job under the LODR guidelines for any issue that is coming in. They are ensuring if you operate from a garage, please write, I am operating from a garage. And so that people know that you are not operating from Mumbai in high rise buildings. in a glass door building. You are operating in actually somewhere in a deep, what do you call it, inland of the country, and operating it so that the cost efficient ratio is better. Therefore, you can produce more and sell and so on and so forth. So I think that's something they are ensured that this kind of disclosures are made fully. More than what would a record also they are now disclosing it. Therefore, one should learn to understand this thing, whether retail investors will be able to see all such things by themselves and take investment call, or they should leave it to the money managers like us. Even if we make mistakes, my mistakes will be a small proportion of the overall success that we create. Therefore, that's why one has to take the call, and basis which one should take the leap of faith through the mutual fund investing. And Aditya mutual fund, I've been there for last 30 years in cycles, and I'm sure we will do the right due diligence before making investments in the interest of investors.
Sure, invest in these IPOs through the mutual fund route. But just for the benefit of retail investors, if one is subscribing to these IPOs, what is the ideal time frame one should work with for their investment? Because they are investing in future growth when it comes to these consumer tech names, right?
So two type of investors are there. Those who come for immediate pop-up and they borrow and they look for immediate pop-up, they do. Some investors, they have a fund to participate in every IPO. There are different kind of characters of people are there, where they will invest only in IPOs. The moment IPO gets listed, I'll sell whichever way it comes. And there are five investors who are looking for investing, staying invested in the company for long term. I think you have to first assess which category you fall. What is the purpose for you are coming? Are you actually putting your temporary money into IPO for listing gain? Then you must stick to that. Then you should not become greedy. No, no, now that I'm making money, I'll hold on. Now that I'm losing money, I'll hold on, so on and so forth. If you take a purpose for which you are coming, you must stick to the purpose. Otherwise, my own suggestion is most of the investors who fall in the third category. We actually am investing for building a portfolio for long term. Then you must also ensure that how many such companies will make investment, how many such stocks will be in your portfolio. If you every IPO start investing with the long term investing by yourself, there is high probability you will end up owning about 100 companies in your portfolio. Then it will become a completely messy for you in terms of monitoring it. Then you should actually sell everything and then move into the mutual fund so that or have a financial advisors. Every today, fortunately, mutual funds have created financial advisors, mutual fund distributors across every part of the country. Even they'll be able to step in and then give you right input on these things. They'll not give input on investing in IPOs and stocks. They'll definitely be able to give input on mutual fund investing. So that's the way one has to approach their overall investing theme rather than stick to themselves saying, I know it better. Frankly, I know it better in today's market, it doesn't work out that well.
Okay, taking your point, Bala. But last question, I know we've overshot our time here, but last question, top three overweights at Aditya Birla Sun Life right now, and which is that contra call that you are betting on now?
Sure. So clearly, I think banking and financials remains one of our overweight. I think consumer durables remain one of the overweight sectors, and pharma is a neutral weight, as well as capital goods sector is also marginal neutral to underweight. There is sector where we have taken some kind of calls. Even energy sectors actually we are neutral weight to the index. The sectors where we are our fund manager are taking bit of contra call. The IT as a sectors. One is got corrected quite significant. They are of course revisiting their own plan in terms of how they'll be able to continue to the growth momentum by adapting themselves to the change in the world and IT space, like AI, OpenAI, and so on and so forth. That's something, balance sheets are strong, cash flow is very good, they can go for buyback and so on and so forth. And as the interest rate starts coming in, they have a direct correlation to the spending that will also come back in the global market and IT space. Therefore, IT as a sectors, we have taken a contra call, and especially the large names, which I think hopefully should pay. As whenever you pay respect to the valuations and able to actually take a right bet at the right time, generally it pays off. That's a call that our fund manager has taken as a fund house.
Sure, I know you don't talk specific stocks, but what about the AI bet that some of these large cap companies are taking? For instance, TCS, the data center bet that they are taking. Street was a bit worried about, the fact that it could be an expensive bet. Any thoughts?
I think if you're able to get it right, I think it can do two good things. One, of course, existing traditional businesses getting into the new businesses, and they can make it really successful because they have the wherewithal, they have an experience. The learning curve generally is faster. Recruiting talent is never an issue, and therefore their ability to drive the future growth would become real. That's why they all have got evolved, right? All these big companies have seen multiple cycles of different kind in the worlds of technology change. Therefore, given the fact they're also recognizing this an opportunity, like the US is doing it, that's a big move, and therefore that itself is an indication of entry point. And third is making it really successful, given the fact they're all well-tested companies. We are not only expect and hopeful that they will make it really big from the overall perspectives. And third is as they start showing results, we must also consider value re-rating. I think sometimes when things are not great, it get derated. Then it can also get re-rated as well. So re-rating also would come. That's the way the market always behaves. I would assume they will be in this kind of
Oh.
trajectory as we move forward.
Hmm. All right. Fair point. With that, Bala, I would like to thank you for taking out time and sharing your thoughts with us. Always a pleasure, and I look forward to our next conversation as well. I still have a lot of questions, but I'll save it for the next time.
Thank you. Thank you, Nandita. Thank you.
Thanks a lot. Well, on that note, quickly take a look at the market. Just about around that 25,700 mark, 25 points lower on the Nifty. We are near about that 25,700 level. No big cuts coming in. Let's see whether we can end the day on a positive note and snap out of a two-day losing trend or not. In terms of the mid-cap index, it is holding firm, trading in the positive zone, and the breadth is also in favor of gainers. So nothing to worry about there. So let's see how things really pan out. But for now, we are looking fairly okay. Of course, how the texture will really pan out through the day, we'll take stock of them of that at 3 p.m. on closing bell. So don't forget to tune in for that. Till then, thank you for watching. Have a great trading day and come back and join us later. And also stay tuned to moneycontrol.com for all your other news and updates. Have a great day. Thank you.